Hey everybody, Tom Berry here with ILS Capital. The topic for today is what is the flow of my money if I invest with you? In other words, another way to ask that is where's my money go? So this is a question that we get asked a lot, and I think it's a great topic. So I want to explain, but it is a little bit complex, what happens with your money when you invest with us in our ILS Growth Fund or our ILS Income Fund first. Then we'll talk about our investments in our shopping centers afterward, because they're a little different. So the ILS Growth Fund and Income Fund, when somebody invests in one or both of those, they're going to put their money with us through usually a wire transfer, an ACH transfer, and it goes into a segregated fund we call our escrow fund. In other words, that money is segregated from any other money from any other company that we have. We operate a lot of different entities, each one of them with their own segregated checking accounts, but when an investor invests with us, it goes right into that escrow account. That way it is logged to that customer, and that customer's money is only sitting there with any other newcoming customer's money. It sits there till the first of the month. On the first of the month, after the investment was received in our escrow account, our asset manager for the funds, Jeff, is going to go shopping with that money. You say, whoa, wait a minute, what's he doing with my money? He's going to go shopping for notes. These are both note funds, real estate note funds, and he's going to go shopping with the money he has received in that escrow account over the preceding 30 days. He's going to go to one of our sister companies, either ILS Lending or Pearl Funding, and he's going to look at the tape of notes that those two companies hold, and he's going to pick the notes that he wants to buy for those funds. Now, we have a written criteria for the note funds, so only a certain type of note qualifies to be owned by the growth fund, and only a different type of note qualifies to be owned by the income fund. So he's going to use those qualifications against this roster of notes that ILS Lending and Pearl Funding own, and he's going to pick through and highlight before the end of the month. Actually, he will have them highlighted and what we call on hold. In other words, our note sales team will not sell those notes because they know those are going to be bought by our internal funds. On the first of the month, he's going to take that money, he's going to buy those notes at par. Another distinction that I want to make between us and other companies is we do not put a premium on the sale of those notes to our funds. We don't make a nickel off of the sale of those notes to those funds. We make our money over here on the funds when you make your money. Now, our loan companies have charged fees, origination points and so forth, and they keep that. That pays our origination team and the rest of our staff and offices and so forth. The funds don't pay for that. But these notes are sold at par. If it's a $100,000 loan, the fund pays $100,000. Now the fund owns that loan. And that is the flow of your money. After your 12-month lockup period with a 90-day notice, you can take out any or all of your money, and your money would come directly from the fund right back to your account with the instructions that you give us. So that is the flow of money from the point that you wire it to us to the point that we wire it back to you. I hope that's helpful, and it might answer a few questions that you had. And if you have more questions about our funds, whether it's our note funds or our equity fund where we purchase shopping centers, or even our loan products, reach out to us, click one of the links below corresponding, and we'll get you information on that.